Everyone talks about residential real estate market of Dubai, apartments, villas and townhouses, but nobody is speaking about what's quietly happening in the commercial real estate. And that's interesting because that's usually where the real opportunity starts. Let me ask you something. Dubai today has over 250,000 licensed businesses, and every year 50,000 new businesses are being licensed. But here's the real question. Where will all these businesses work from? That's what this video is about. Hi, this is Usman Siddiqui, your real estate investment advisor, and today we are going to uncover a topic which majority agents and investors overlook. So let's get right into it. Section 1. Why commercial is different. Residential demand is emotional. Commercial demand is logical. People buy homes because they want them. People buy or rent offices because they need them. A business cannot operate without an address, a workspace, and a location that is accessible by both staff and clients. That's what makes commercial real estate a necessity. And when the demand comes from necessity, the growth is much more stable. Section 2. The demand and supply. Let's talk numbers simply. Today, Dubai has over 250,000 active businesses. Over the next 5 years, around 50,000 new businesses are expected to set up annually. That's 250,000 new businesses by 2030. So effectively, the number of businesses are expected to double. Now obviously, not all of these new businesses will want offices. Some will want retails, warehouses or industrial spaces. But let's be conservative. Even if only 20% of these new businesses demand offices, that's still 50,000 new businesses. That's our demand. Now let's look at the supply. This is where things get interesting. Commercial falls at just 2% of the market supply, due to which the occupancy rates go up to 97%. On average, only one commercial project is launched every 3 to 6 months. That's up to 2,000 new office spaces every year. Even historically, in 2024, only 1,400 office spaces were launched and sold over the whole year. Project that forward to 2030, that's around 10,000 new office spaces. Now compare that to the expected demand. 50,000 new businesses against just 10,000 office units. This gap is the value I see. And this is happening while 300,000 residential units are being delivered in the same timeline. So you tell me, what's shorter in supply against its demand, residential or commercial? Section 3. The history and track record of commercial spaces. Let's quickly address something important. Office prices did soften between 2015 to 2020, but why? 3 main reasons. Number 1, companies moved out of older office buildings into grade A towers. But given such a shortfall of supply for premium office towers back in the years, it affected the entire market to dip. Number 2, oil price shock and global trade tensions, which slowed corporate expansion and investment overseas. And number 3, businesses were already downsizing before COVID, and once the pandemic hit the market, it only got worse. But look at what's happening after 2020. Office prices have grown 90% over the past 4 years. Last year itself, it saw a 27% capital growth in a single year. This happened due to a list of reasons, but some of them were the US-China trade tensions, the Russia-Ukraine war, the golden visa expansion, and easier regulations of Dubai compared to the global markets. Speaking about the rental growth, it grows at an average of 19% every year. However, over the past 4 years post the COVID boom, rentals have grown 36% in a single year. Compare that to residential, it only grows 5 to 7% annually. If you look at the transaction value, in 2019, it totaled at 20 billion dirhams. 4 years later, by 2024, it totaled at 90 billion dirhams, a 350% growth in 5 years. To note, 40% of these transactions were just for office spaces. That's not hype, that's data. Section 4. Why Business Bay? Now let's talk location. Business Bay is not hype, it's math. Over 55% of all office transactions happen here alone. Why is that? Because number 1, it's located in proximity to the majority economy's engines considered as the downtown, DIFC, World Trade Center, Port Said, and the DXB airport. And number 2 is accessibility. It has direct access to 2 major highways considered as Sheikh Zayed Road and the Al Khail Road. That's why branded towers like the Opus within Business Bay, have seen 320% capital growth in just 3 years. Location compounds returns. Section 5. The opportunity HQ by Rove. Now let me show you where all of this comes together. HQ by Rove. This is the first ever hospitality branded commercial tower in Dubai. 28% of the project is just dedicated to amenities. Located so well within Business Bay that it's away from all the traffic congestion. Also considered the billionaire's row of Business Bay. Additionally, delivered fully furnished and fitted. This saves 500 to 600 dirhams per square foot of cost. This matters much more than fully furnished residential apartments because office spaces are never delivered furnished, but rather it's the responsibility of tenants to do so. However, given the fact this opportunity will be delivered fully furnished, it will only attract a higher tenant appeal and higher occupancy rates. Speaking about the pricing, it sells at 4,500 dirhams per square foot as an average, where you can choose from as low as 680 square foot all the way up to 22,000 square foot, which is also considered full floors. One very interesting thing about this project is that how the floor plan is designed is that you have 22 units every floor. If you wish to not go for an entire floor but bigger than 680 square foot, you can adjoin 2 office spaces and make it a deluxe, which makes the total size at 1400 square foot, and yes, the prices will remain the same. This continues from 3, 4 all the way up to 22 office spaces, allowing you to choose an office size and price which suits your needs perfectly. If you compare this project to the other commercial launches going on in the area such as Lumena by Omniath or Inara by Omniath, sizes there start from 5,400 square foot or 9,700 square foot. With that, the price per square foot is starting off at 6,300 or 6,500, meaning your total ticket size is nowhere less than 35 million dirhams. This ticket size is not edible by majority of the retail investors in Dubai's real estate market, and additionally, the demand for office spaces is highest for sizes below 3,000 square foot and above 1,000 square foot. If you're wondering about this other commercial project, which is Burj Capital, yes, this is selling at somewhat of the same or lower price than HQ by Rove, but there are 3 things which are not of benefit over here. 1, it's not delivered fully furnished or fitted, meaning you will be expecting a higher 500 to 600 dirhams per square foot of cost. Secondly, it's not a branded collaboration, so it's not something which is exclusive. And thirdly, the location. Now, if you look at this map over here, this illustrates the plot location of each and every ongoing commercial launch in Business Bay. This is exactly where Burj Capital is located. It's centered with a lot of residential projects as well as commercial projects, which makes it very highly traffic congested. If you look at the plot location of Lumena, yes, it is located on the Sheikh Zayed Road and it's right next to an operational metro station. It may sound appealing in the voice of it, but given the fact that this is the main entry point for Business Bay and you have a big 4-way traffic signal over here, a huge traffic congestion is already seen. With over 1,000 units coming in with Lumena Tower 1 and 2, you have Bays, Avera Palace by MR, Downtown Residences by DR, and many other residential projects coming into that area, which will deliver at least 2,000 to 5,000 new units in this space, which is only going to make the area much more congested with traffic, as no new roads or developments are expected or seen by the RTA. On the other hand, when you look at this plot location, you do have Inara by Omniath, which is also in the location which is considered the billionaire's row. However, you still have the problem of the sizes and the price per square foot, which is over 40 to 50% higher in terms of price per square foot than HQ by Rove, and the sizes, they start at 6,500, making the ticket size no less than 60 million dirhams. If you're wondering what is this which I've marked, which is a future commercial district of Omniath, this is a future commercial launch which is going to be seen in 2026, which is going to sell at a price per square foot of 10,000 to 12,000 dirhams per square foot. Another very important thing I would like to mention about HQ by Rove, yes, it is located in the Billionaires Row and it is close to the Al Khail Road, but to add value to that, what the developer is doing, they're going to develop our private bridge over here to connect this commercial tower to the Al-Khail Road itself. Meaning the project or the commercial tower will have its own entry and exit point to the Al-Khail Road, which only makes the accessibility and the connectivity for this project even better. And yes, if you're having a doubt, such kind of bridges or such kind of developments are not being done for Inara by Omniad right next door. Coming back to the opportunity itself, HQ by Rove, you get a 50-50 payment plan over here on which you're paying just 10% annually. That is a very important point to note of, because majority commercial launches, one, you don't have a 50-50 payment plan, and secondly, you're paying a hefty amount or a hefty percentage just within the first year or two, which ranges from 50 to 70% just within the first 2 years. Here, within the first year, you're only paying a down payment and a 5% installment. To give you a much better understanding of the parkings, it comes with 8 parking floors and 23 office floors, making the commercial tower 31 floors high. If you're wondering how many parkings you have in the project, it touches 1,000 parking spaces, which is 40% above the necessity amount. Now, this small point can only give you a better idea of how much the developer cares about the investor and the end user of this development. Now coming to the investment analysis of the opportunity. Right over here, I've marked out 2 different approaches for both their expected rentals and expected capital growth. And firstly, starting with the conservative approach, I've marked out a 13.5% expected annual growth over the next 4 years. Yes, that is conservative, because if you do recall, earlier in this video, I had stated that office prices have grown 27% over the past 1 year. This is half of that. At this rate, you're touching 54% appreciation in 4 years' time, which results in a return on equity of 108%, because only 50% is invested over the whole construction period. If you look at it from a slightly optimistic approach, and if you assume the market to perform at the same rate as last year, which is at 27% capital growth annually, it can touch 108% appreciation by 2029, which is resulting in an ROE of 216% in 4 years' time. You tell me, is something like this possible with the current situation of residential real estate market of Dubai with an investment of just 1.5 million dirhams? Absolutely not. Now coming to the expected rentals, and if you first speak about the conservative approach, the rentals going on in Business Bay today ranges from 150 dirhams a foot all the way up to 950 dirhams per square foot. If you would like to take an average of that, that's 550 dirhams per square foot, which is equivalent to a 12% ROI on a PSF of 4,500 dirhams per square foot. If you look at it from a slightly optimistic approach, current average is 550 dirhams per square foot, and if you expect an annual growth of 10% in rentals, which is half of the current market average, you're looking at 800 dirhams per square foot by 2029. That is equivalent to 18% on a PSF of 4,500 dirhams per square foot. Now let's wrap this up. Commercial real estate isn't for everyone. But if you're looking for beyond residential, thinking long term and focused on logic and not emotion, then commercial offices, especially with such kind of exclusivity, definitely deserve your attention. The biggest opportunity usually comes before everyone is talking about them. And right now, commercial real estate is being ignored by the most. To give you a better understanding of the exclusivity this project has to offer, if you do recall Burj Capital, which I showcased to you earlier in this presentation, yes, you must have seen that you were getting units at a similar or slightly lower price over there. However, Burj Capital was a project which was launched over 6 months back from now and is still only 50% sold, while HQ by Rove was only launched a month back from now and is over 90% sold. That explains which project wins. The government of Dubai plans to soon expand DISC 2.0 and Dubai Design District as the future commercial hubs alongside of Business Bay. However, I feel the same problem of prices and sizes will be seen in the future commercial launches in those two areas, making it inedible for majority retail investors. The entry point you get today with HQ by Rove is very similar to the kind of entry point you got with townhouses and villas in 2021, much before the hype and when prices were at the lowest. If you want to make exceptional value the way people made post-COVID, this is the opportunity you need to look at. Now, if you want a deeper breakdown on the layouts and amenities this project has to offer, alongside with all what I presented today in this video, feel free to contact me on the number mentioned below. I hope you enjoyed this video today and see you in the next one. Thank you.